Yes, I think we are already in recession for most people. Is the way the S&P is. The S&P capitalization weighted is at the new high, but equal weighted, the 500 stocks, if you treat them equally, is not at the new high or has grossly underperformed the S&P market cap weighted index. And for most people in the world, the economy is flat to down. The standards of living are going down. I have friends, they tell me they don't feel safe to walk around Berlin, Frankfurt, Munich in Germany, but they feel safe walking around Moscow. Yes, that is the new world. That is the world the socialists and the Greens and all these nuts have created.
On this episode of the What the Finance podcast, I have the pleasure of welcoming back Dr. Marc Faber. So Marc is a well-known contrarian investor and the editor and publisher of the Gloom, Boom, and Doom report. So Marc, thanks so much for coming on the podcast today.
Well, it's my pleasure, like always. Thank you very much for having me.
No problem, man. I always get it wrong. I don't know why.
Don't worry. I sometimes also get it wrong.
Yeah. That makes sense. So in our last conversation, it was sort of close to 6 months ago, end of last year. You mentioned that you thought we were already in a recession, despite there being strong liquidity. So do you still agree with that phrase, or do you think things have changed since then? What are your current thoughts?
No, actually, I think it's more evident that for the majority of Americans and the majority of people around the world, economic conditions are not favorable because their cost of living has been going up more than their salaries, than their compensation. So there are many surveys in the US which seem to indicate that about two-thirds of Americans live paycheck to paycheck. And I live here in Asia, and I can observe the Asian economies fairly well because I travel and I go out and I mix with people. I mean, the Thai economy is probably the worst in Asia, and the stock market has performed also miserably. But it's still kind of indicative. I have a friend, he has a restaurant, and he told me his figures precisely over the last few years. Say, after COVID, the traffic in his restaurant increased, and this year, May, June, is the worst he's had on record. And another friend of mine, don't think that I only have friends who have restaurants and bars, but I have quite a few of those. Another one, he owns a bar, and his business, he also said, is the worst he can remember in May, June. And another bar I know, which typically does fairly well, I went last night. Last night it rained very heavily until about, say, 9 o'clock at night. But I usually go out around 11:30 at night, and that place was empty. And then they have a boxing stadium here in Chiang Mai, as an example. Uh, they have Thai boxing matches here, but around the boxing stadium or the court, the boxing ring, there are many bars. And, they were, more than half empty. So the business isn't very good. Tourism, relatively speaking, is doing okay, but it's not back to the level of 2018, 2019. It's still down about 30% from those times, also in Vietnam. So all I'm saying is When you look at the stock market, you would think the economy is booming. The economy is booming for the 1% or 10% of the population. The 10% of the population owns almost 80% of all stocks in the US. So for these people, the economy is booming, but not for the working man.
And is this all linked to inflation, or the U.S. government and other governments would want to make you think that this is big companies price gouging, profiteering? Is that what's causing it? Yeah.
Inflation only happens for one reason, and the reason is an irresponsible, incompetent government. If the government doesn't want inflation, it can do it by essentially not having any fiscal deficits. A fiscal deficit, by definition, is inflationary, but it is in particular inflationary if the central bank finances the deficit, which has happened in the US.
Okay, so that's the main issue that we're seeing, and then the challenge that I see is that governments will keep doing what they're doing, which is bad, and then we're going to start to see this spiral of costs keep going up. They blame businesses stop investing, and it just keeps going and going. Is that sort of what you think will happen, or will people get some sense?
Well, who knows what will happen? But I see more and more people, and I tend to agree with the theory. They say, look, Mark, the governments will keep on printing money. The purchasing power of money will continue to depreciate. As long as governments print money, stocks will have a rising tendency. That is correct. Now, the question is that stocks, especially in the US, among the, say, magnificent seven semiconductors and so forth, these stocks, they have a relatively high valuation or extremely high valuation. So even with money printing, stocks may not go up a lot. And as we've seen today, as an example, the CPI came out and it was perceived to be better than expected. Now, the CPI, the way the Bureau of Labor Statistics calculate the CPI is very questionable. So, whether the inflation that they publish is reflecting the economic reality on the ground or not is a different question. In general, my sense is that prices are going up much more than what the Bureau of Labor Statistics seems to suggest. But anyway, the market is the market, and the investment community likes to believe what is good. So bonds rallied. But at the same time, the dollar went down. You understand? If a country like the US decides to print money, they can print money like in Turkey and in Argentina and so forth. Over time, the currency will then depreciate. The question is by how much? And my view would be that if the US embarks on quantitative easing, if they cut interest rates, in my view, the dollar will begin to weaken considerably. Now, the question will then arise, well, weaken against what? Because the other currencies are not much better. But my view is that it will weaken against bitcoins. Not that bullish about bitcoins, but the market will perceive a weakening dollar as being positive for bitcoins, and it will weaken against precious metals, gold, silver, platinum, which I suggest people hold uh, to a certain extent, not all the money they have in gold, silver, and platinum, but a large percentage, say 20, 30%.
Okay, and if I'm not mistaken, platinum hasn't really had the same run as gold and silver. Um,
Well, it ran up and then it came down again recently. Uh, it is, I think, at about an all time low relative to gold. It's quite remarkable.
yeah, and I think what we're seeing is in emerging markets buying gold and silver, and then the West is sort of selling gold, silver, everything, the stocks, everything like that. Would you agree with that?
Well, the world is increasingly divided in two blocks. Uh, the Anglo Saxon bloc, under the leadership of the US, and Europe, plus Japan, Australia, and New Zealand. The so called advanced economies, the former colonial powers. And they haven't been able to shake their idea of supremacy entirely and still travel around the world and lecture countries like China and India about human rights and democracy and. And then you have the countries that are represented more by the BRICS countries, China, India, Russia, and so forth. These are economically new countries on the block in the international trading system. They weren't involved in international trade until just the last 30, 40 years. And these countries have become economically very powerful. Uh, they also include 80% or close to 90% of the world's population. These countries have a different view of the uh, American neocon view of the world, where the world should be ruled by America because America is the best option for the world. These, rightly or wrongly, you understand? I'm not giving a judgment here. I'm just telling you that countries like China and India will not accept a world ruled by America. It may be the best option for the world to be ruled by America instead of being ruled by Russia or being ruled by China. I don't know. But these countries, they strongly oppose this kind of hegemony of the United States.
Yeah, no, that's a good point. And I guess if we look at the rise and fall of empires, the main reason we've seen in the past is debt levels, but also the cost of debt. So that could be something interesting to watch, and it normally happens over a long period of time, not in a short period of time.
Yes, it takes a long time. And the last time there was a big change in leadership in the world was between Britain and the US. And this change in leadership didn't cause a war. The war came for other reasons, but the war came mostly because Germany overtook Britain as the largest economic power in Europe in 1908. So the gradual rise of China, and China has now an industrial production that is much larger than the US. That is something that the US doesn't like, and they show it openly. And this create, in my view, unnecessary tensions.
Yeah, agreed. And I think if you look at the 70s with the Soviet Union and China, there was um, they had a split, and China was sort of became allies with the US, and that was seen as really smart geopolitics, because currently, as you said, you have the manufacturing power of China and then the commodities of Russia. Those two things together seem to, make a very self-sufficient block that can then spread that with the rest of emerging markets. Is that sort of what you think is currently happening?
Increasingly. But you have to see the tragedy. It has been written about this already more than 100 years ago, that one geopolitically, China and Russia should not be together. In other words, one should split them apart. But the neocons in the US, in their incredible stupidity and incompetence, have managed to cement a friendship between Russia and China. This is unique in history, that a group of people in government act entirely contrary to their interests. The interest of America would be to be friendly with Russia as a counterbalance to China military, or be friendly with China as a counterbalance to Soviet power. But no, what the US has managed, I mean, this is something for a record, a Guinness Book of Record in geopolitical mistakes. What the US has managed to do to unite Russia and China is hard to believe, but you needed an American State Department to be this incompetent.
Yeah, and it does seem so. We're talking on the sort of Wednesday, the 12th of June, and the EU released tariffs on Chinese electric vehicles today. And I think all these actions, and you could say, sure, it's protecting industry, it's doing these, you're protecting democracy, which is important, but it is also meaning that moving forward, there's costs are going to go up in. Hey everyone, sorry for interrupting. I just wanted to extend a massive thank you to you for listening and tuning in, and for your support over these 3 years. So we've had hundreds of guests that we've welcomed on the podcast. We've had millions of views with hundreds of thousands of different people listening in. So I just wanted to thank you. I started this as a student. I'm now currently working, and I've always done this on the side just because I have a passion for it and I've enjoyed it. And probably similar to yourself, you listen to all these, different YouTube channels and podcasts of people listening to different guests. That's how I started, and I just wanted to sort of take the plunge and be able to have the opportunity to speak to these people, and you've made that happen. So thank you very much. Just myself, don't make any money from this, and it's really a passion project. So thanks for supporting that passion of mine. If you wanted to support the channel, all I ask is if you could like, subscribe, or even comment, positive or negative feedback. I'm always willing to take constructive criticism. I'd really appreciate that. But otherwise, thanks so much. If you can believe it, only 14% of our listeners actually subscribe to the podcast. So yeah, if you can, great. If not, no problem at all. Thanks for listening. And yep, let's get back to the show. Europe and other parts, there's going to be more there's not going to be as much efficiency, more inefficiency, and more challenges, I think, for the Western world that a lot of people aren't ready to pay for.
They subsidized electric vehicles in Europe. Now they suddenly wake up and see that the Chinese can produce them much cheaper than their subsidized vehicle in Europe. So they have, of course, they're all interventionists, all of them. You can talk to any government official. He has become an interventionist. Nobody accepts a free market any longer. So now, having subsidized these industries, they have to protect them. It's a complete joke. And who suffers? The consumer.
Yep, agreed. So where do you see, as you said, things aren't going well in the economy. So you think there's going to be, do you see there being a recession and a market crash, or I guess what do you think could happen?
Yes, I think we are already in recession for most people. Is the way the S&P is. The S&P capitalization weighted is at the new high, but equal weighted, the 500 stocks, if you treat them equally, is not at the new high or has grossly underperformed the S&P market cap weighted index. And for most people in the world, the economy is flat to down. The standards of living are going down. I have friends, they tell me they don't feel safe to walk around Berlin, Frankfurt, Munich in Germany, but they feel safe walking around Moscow. Yes, that is the new world. That is the world the socialists and the Greens and all these nuts have created. And the stock market, who knows? I mean, as I said, the stock market can go up in nominal terms. You can print money, and it can go down in real terms, inflation adjusted. I've just written a report. What is inflation? Because it's very important to understand that when consumer prices go up, like the price of bread and hamburgers and butter and cars and insurance premiums and homes and so forth, these are consumer prices. This is just one symptom of inflation. Another symptom would be asset inflation. When home prices go up to a level where the typical household being the household who earns the typical income, the median income in a society, when they can't afford them anymore. That eluded the wisdom of our central banks. That if they keep on printing money, maybe consumer prices don't go up a lot for years, like between 2000 and 2020, consumer price increases were moderate, but we had very high asset inflation. But what do you want if you're a central banker and all you're interested in is to advise your buddies on Wall Street and you haven't read the classical economists like Schumpeter and Hayek and Mises and Friedman and so forth? You wouldn't know. I mean, I'm astounded by the lack of knowledge and especially the lack of interest to learn something by today's central bankers. They're all political animals, all out to give speeches, to become famous, to get an advisory job with Citadel or Goldman Sachs or whatnot, but they're not interested to do a good job.
Yeah, and the concerning thing now is that governments are sort of printing more money with their fiscal sort of support that they're providing, as we said, industries and everyone. Yeah, it's scary.
Money printing also leads to socialism because it expands the government, it expands the state at the expense of the private sector.
Yeah, definitely. So, uh, you're a known as a contrarian investor, and you normally have some pretty interesting ideas of unloved companies or I guess regions. So, I think where do you currently think is unloved?
Well, we have to distinguish between good value, which may not move up in the near future. Like I see some value in Latin America. I see some value in Asian stock markets and things that move. You understand? The market is very focused on near term action. So, assuming, and I'm not saying this is what is good, I'm just saying this is what is likely to happen. The Fed cuts rates. The Fed hates Trump. That is sure. They don't want Trump. They want to help Biden in the November election. So they'll probably cut rates. And if the stock market goes down, they'll cut them even more. So uh, I, I don't think there is a crash coming, or there could be a crash, but it's short term because right away they're going to print again. Number two, I would be kind of assuming that the government in the US could declare war or go to war in the next 6 months, in which case no elections will take place. Is a possibility. And if there is war, it will be used as an excuse for larger deficits and more money printing. So I repeat what I said before. In the near term, gold will probably go down as well as silver and platinum, but I would hold some physical gold uh, as an investor. And then there is some real estate around the world that is not expensive. It's expensive on prime locations in Beverly Hills and in Palm Springs and Palm Beach and Newport Beach and so forth. But it is inexpensive in small towns. And in small towns in Europe, they give it to you. They give it to you.
Yeah. So do you think those are? Because I guess some of them are there because there's no work there, but then now because you can work virtually, it doesn't matter where you live. So I know in Italy they're giving away homes for €1.
Yes. I mean, you have to pay something to redo them. But in general, nowadays, many professions can be done anywhere in the world. I mean, 30 years ago, I wouldn't have been able to do my business out of Chiang Mai.
Yep. Now we're talking tens of thousands of kilometers, or more than 10,000 kilometers away, which is amazing to think.
Yes, I mean, that's why I'm not very optimistic about property prices in financial centers because it can be decentralized, the industry. And so property prices in financial centers are unlikely to go up a lot. Plus, the taxes in these large cities are likely to increase and so forth. Uh, but the whole investment sphere is going to be very selective. I think if you buy the S&P, it's not going to make a lot of money for you in the next 10 years. That is unlikely. If they print money, it will go up, but the dollar will go down against gold. But you'll probably be better off in stocks than in bonds if they print money. But near term, with the cut in interest rates coming, I think the US Treasury market or US bond market has some potential. I mean, I wouldn't be surprised with my negative view about the economy that within 12 months, the Fed fund rate is around 3.5%. It wouldn't surprise me. I think it will be inflationary, but it wouldn't surprise me. Long term, I'm very bearish about bonds, long term. But you understand, every market within the trends up and down. And I think for the next 3 months, we could have a rally in treasury bonds.
If we go to miners, they're sort of another industry that have been very unloved. I guess gold miners and silver miners. Do you think they're going to benefit as well from, maybe not in the near term, but in the long term of this increase? Or uh,
Yes, I think the miners are cheap or inexpensive against gold and against the S&P. Very depressed. And then you have miners in South Africa. They're extremely depressed. So I think there is an opportunity there. The other opportunity of depressed stocks is Hong Kong property stocks. Very inexpensive.
Perfect. So yeah, Mark, thanks so much for your time today. Really appreciate it. My last question is, what is one message you like people to take away from our conversation?
Well, I mean, my sense is that the world has become obsessed with money and making money. And of course, I'm also interested to make money. This is my business for the last 50 years, to be in the financial sector. But I believe there is a time where conservation of money becomes very important. And if I look around the world, the geopolitical situation is unfavorable. And it's unlikely that suddenly China and the US and Russia will all embrace each other and live happily thereafter as close friends. So the tensions may actually go up. You look at the governments around the world. In Europe, we have had largely socialist governments. Now, there were elections recently, and there was a shift to the right, okay? Shifting to the right means reintroducing more market economy policies and a more capitalistic system. But what happens to the stock market? Because the media people are all socialists and communists, they talk this down. They argue this is negative, dangerous, that the right has more power. So stocks sold off. This is the stage at which the science of uh, the economy has uh, morphed, morphed into. What is good is then perceived as bad by the socialists and the capitalists. We have a lot of socialists. They're what I call salon socialists. They are rich people, but they support socialist measures because the money flows to them anyway. The government hands out money to people, and the people have money to go and buy in their stores, and so forth. The money flows back to them. So they support the socialists, and they perceive sound policies, common sense policies, because the right in Europe is not ultra right. It is center, in my opinion. I'm more on the right than all these parties in Germany and in France of the right wing factions. But all these people, they are painted as evil, as Hitler sort of characters, when in fact they have nothing at all to do with National Socialism, with Nazi uh, ideas. But they have something to do with common sense. And common sense escapes the green communists and the socialists.
Yep, and hopefully there's more common sense in.
It also escapes the Biden administration. That I can tell you.
Yeah, I think everyone just needs a bit more common sense. But Mark, thanks so much for your time today. If anyone wanted to find out more about your work, where would the best places for that be?
Well, we have a website, gloomboomdoom.com, or they can send me an email. Well, thank you very much for your time, and it's always nice to talk to you. And I hope, I sincerely hope your viewers will have a satisfactory financial position in future. But I think we have to realize that asset prices by and large are high. They're not cheap. There are some cheap assets for good reasons. You understand? Hong Kong property, the outlook is bad, so they're low. Thai stocks are cheap because the outlook is bad. And the trick is essentially to buy bad things that are cheap, where the likelihood of an improvement will take place. We had an improvement in Argentina. Milei is on the right, and the stock market went ballistic. Now, in my view, it's overpriced. It will be due for a correction.
Yep, that's a great point. But thanks again.
Okay, bye bye.
Hey everyone, thank you for listening. I really appreciate the support. If you've got value out of this, I'd really appreciate it if you could like, subscribe, or comment. You know, good or bad feedback. I'm always open to that. But it really helps with the channel. As I said before, only about 14% of people actually subscribe to this channel. So if you were to that, it would really help. It could mean we could continue to grow. If not, thanks for watching, and see you on the next show. And you also might like this video right here. All right, thanks again.